Stocks are up, the dollar is down. What should you be doing with your money? Well, we're going to put those questions to a hedge fund manager who's traded through more than his fair share of bumps. Jeff Brummette helps to manage $1 billion in a long-only fund and $300 million in a hedge fund product with Strategic Fixed Income. In 2008, the long-only fund up more than 30%, the trading fund up 53%. You may recall last year the S&P 500 down close to 40% for the year. Jeff, we're glad to have you with us. I'm just curious, Australia raised interest rates. They're ahead of the pack. Does that change at all your view of global equity markets? Does it make you more optimistic?
No. Good morning, Deirdre. No, it doesn't. I think Australia is in a very different part of the world, both literally and figuratively. I mean, they're so much more tied into China and what's happening to Asia that they can do very, very well, whereas Western Europe, the U.S., can still be mired in the aftermath of the financial crisis.
And of course, as we've discussed before on the show, Jeff, Australia and Canada, their banking systems didn't seem to assume as much risk as some of the other countries you just alluded to.
That's right. They weren't as levered, and the households there weren't as badly levered either.
So in your view, equities, we've come too far too fast on a global scale?
Well, we've come very far very fast, and I think that now it's time for the real economy to sort of catch up and show that these valuations are justified. And the data that we got last week in the U.S., the employment data and some of the other data suggests that perhaps the real economy is not moving fast enough to justify these valuations. So we'll be looking very closely at the earnings that are coming out for the third quarter over the course of this month, and really looking closely at sort of the outlooks that companies give for what they think is going to happen in the fourth quarter. We think it's going to be a bit disappointing.
What's fair value, Jeff, for the S&P 500 right now?
Fair value is probably, if you take earnings of about, I don't know, $50, $60 a share and put a, 15, 16 multiple, somewhere around 900, 950 is probably fair value.
All right. Let's talk about this relationship between stocks and the dollar. The dollar is falling. You say the trend is down. How low can we go, dollar yen and euro dollar?
Well, dollar yen, we can probably get down to the mid-80s, and euro dollar probably back to 160 again, where we got to at one point last year before the crisis really set in. But what's, I think, more important is where the dollar is going against a variety of other currencies, many of those out in Asia, where I think there's a lot more room for exchange rates to move.
We know you're running a fund, Jeff, so before we let you go, I just want to ask you, how is it to run a fund? I mean, is it hard to raise capital? Do you want to raise capital? What's the tone like versus a year ago?
Well, certainly a year ago things were frozen, and now you're still suffering from the aftermath of that. I think a lot of investors lost a lot of money in a variety of vehicles last year in ways they didn't think they would lose money. Money is still trapped to some degree in some types of funds where gates were imposed. We never imposed any gates on anyone, and so our fund, despite super performance that you cited earlier, suffered significant redemptions as people needed to raise money. I mean, the environment is better now, but it's not the same environment as it was in the earlier part of this decade when money was almost thrown at hedge funds.
Jeff, we thank you so much for joining us. Jeff Brummette there, fund manager.
You're very welcome, Deirdre. Thank you.
Thank you, from Strategic Fixed Income.